Alright guys, this is Andre with the Crypto Ball, and I wanted to say that I took some time off due to the holidays and COVID related things, but now I'm back. And today we're going to talk about Doomsday, the crash in the market, what it means for you, what it means for me, and how I'm navigating this downturn, and some helpful advice that I think could really help those of you that are also building a portfolio. It may have started in 2021, moving into 2022. A lot of this stuff you guys have already heard before. A lot of this is just going to be me reiterating things that I've said previously, because we did expect a downturn past quarter four of last year. Now, we didn't get those meteoric rises, but we did get a crash in quarter one of 2022, which is what a lot of us were thinking. And if you look at my past videos, you will see that I've been saying, hey, take profits in November, December, because 2022 may be bearish. But before we continue, I just want to say I'm dressed up like a fortune teller. I'm not a financial advisor. Don't just listen to me because I'm on the internet or something like that. All right, so Operation Doomsday. I know a lot of us have been taking some losses in 2022, but where there's a downturn, there's opportunity. We want to be greedy when people are fearful. We want to be fearful when people are greedy. And I've always said that we should be dollar cost averaging into our digital assets. And there are a lot of digital assets right now that are going for the low. Things that, I've been saying to accumulate for quite some time. We have Solana. We have AVAX. We have Polygon. We have Luna. There are so many opportunities, especially right now, where you could get into some great positions. And if you believe in cryptocurrency, then you should be fairly confident in a lot of these long-term applications that are emerging and disruptive, that will actually change the way that people interact with the blockchain, change the way that people are interacting with money, and change the future of finance. And I think that these are the things that we should really pay attention to when we're looking into dollar cost averaging into digital assets. And I wanted to spotlight some of those things right now. I am going to make some separate videos on these things in particular, and I already have given some information out on previous videos and media. But, when we're talking about some of these things, I want to do kind of a deeper dive on something like Terra Luna, Mirror, Anchor Protocol, so that we can kind of understand, why is Terra Luna a good thing to get in right now. And actually, let's take a look at the charts as we move into this video here. So guys, I know that, if you're watching this, you already know Bitcoin has been on a downturn here, losing about $10,000 in the course of essentially 10 days. And this is the ebb and flows of the market. But I think that, since everything really follows Bitcoin, and since we did hit a high of 68, 69,000, we start to think, well, how much bearish divergence can we take before we're in a bear market? And by the way, I don't think that we are in a bear market yet, but we're damn close. And even in a downturn market or a bear market, that's when we want to be dollar cost averaging and getting into these assets, right? I mean, some of these things are having a strong bounce, like Terra Luna, 14% today. When we look at the all-time highs of this, right? I mean, we have like a 30% margin from the all-time high, and if you would have gotten in earlier today, you were looking at 45% or something like that. It's these type of things where Terra Luna is actually changing the way that some people are actually doing finance. It's really the base point of an algorithmic stablecoin, and there's lots of protocols that have a lot of total value locked in the protocols, and gives you an APY of, I think, 19.65% a year. It's all of these things that I think makes Terra Luna a good play to dollar cost average in. Guys, I know I've been talking about Polygon for quite some time. I think that Polygon is one of the best projects in the crypto market today. I was buying, Polygon between 220 and 240. Why would I not be purchasing Polygon at 210? I am. I'm buying Polygon at 210. And the reason is because Polygon is needed for Ethereum. Ethereum is unusable without some type of layer 2 side loading action going on. And I think that Polygon is going to be leading the way for a lot of the things that I think the general public is going to be using when they come into Ethereum. And I guess what I'm really getting at here is, as an investor, do you believe in blockchain technology? Do you believe in digital assets? Do you believe in cryptocurrency? Because if you do, then these downturns shouldn't be nearly as scary as they are for some people, right? When I see Polygon going for 210, I'm thinking that this is a buying opportunity because Polygon has such a strong ecosystem and is developed on one of the most secure blockchains ever. Ethereum did more processing of transactions in one quarter than all of PayPal last year. And I don't think that Ethereum is going anywhere. And yet it has a massive problem, being gas fees. Polygon is the leading layer 2 to really go out there and fix that issue. And with them implementing things like ZK rollups and trying to bring infinite scaling to Ethereum, which is a project that is being utilized everywhere, I think that this is a really great buying opportunity. And the reason why I just want to kind of go over these type of projects is just based on, I think that people miss these opportunities when there's blood in the water. When they see things going down, they take all their money and, they actuate their losses. Let's take a look at Solana. Solana hit a high of 258. It's at 144. Solana is a top 5 blockchain. This is a steal when you're talking about purchasing an asset that is going to be utilized in the future. Solana came out of nowhere to break the top 5 spot, and it's trading at a 30-40% margin here. If you were ever trying to get into the Solana ecosystem, or if you believe in Solana, this is a perfect time to buy. And yet when I look online or when I'm talking to people about cryptocurrency these days, they say, why would I buy that? It's going down. And this is what differentiates the people that are going to make money from the people that are just going to lose money, right? Do your due diligence, learn about these assets, and, focus on building a portfolio over a long amount of time. It's not about timing the market, it's about time in the market. You want to be putting your money into these assets because these assets are not going to stay down forever. Blockchain technology is a disruptive, emerging technology that has institutional investors as well as retail sentiment. And the only difference is between this and traditional assets is everyone thinks that traditional assets are stable, and everyone thinks that digital assets are super volatile. We want to be in volatile assets because that's what makes us our money, right? I want to be in assets that have high highs and low lows because that allows me to buy in at the low lows and sell at the high highs. And so I just kind of wanted to make this video before we go into the more in-depth videos, which will probably be coming out later on this week, about why I'm purchasing Solana, why I'm purchasing Polygon, why I'm purchasing Terra Luna, why I'm purchasing AVAX, and what do all these things do? For instance, like the metaverse. The metaverse is not going anywhere. Billions of dollars have been put into the metaverse and will continue to be pumped into the metaverse. Why is it that when the downturn happens in cryptocurrency, metaverse projects drop? It's because people are scared. They really don't believe in that technology. I believe in the technology. So I'm going to continue to put money into the sandbox. I'm going to continue to put money into, Decentraland, Realm, Blocktopia, all of these things because I have a metaverse portfolio that I want to be robust and well-rounded so that when these things actually do appreciate to the numbers that I think that they're worth, I will make a lot of money. And so I want you guys to be thinking of that as we kind of move into this bear market. If we even go into a bear market, I still think that we're pretty bullish, but we are hitting that kind of make it or break it moment. But even in a bear market, that's where millionaires make their money, buying things when they're incredibly low, and kind of building out a portfolio. Now, what are some of the things that I'm worried about that could push us into a potential bear market? There's a couple of things here. The Federal Reserve has a meeting on January 16th to talk about the CPI, I believe. Unsure about that. But make sure that you guys are keeping up with the Federal Reserve these days, because now they're pretty much moving markets. If they're talking about raising the interest rates and kind of taking a lot of this liquidity out of the market, and they are saying that they're going to be doing this by March, it can have a resounding effect on traditional assets and digital assets. And so we should be really taking a look and seeing how this is affecting the market, because it can push us into a bear market. Another thing, I don't want people to forget about this. Mt. Gox Bitcoin settlement. $9 billion in Bitcoin is going to be released to these people that lost their money at the drop of this exchange, this old exchange, Mt. Gox. And no one really knows when they're going to get that money back. But these people bought Bitcoin for $1,000, $3,000, $5,000. They're probably going to want to cash in on some of these profits, even at $40,000 Bitcoin. And so we need to really be keeping an eye out to see, when are they going to get their settlements paid? When are all these Bitcoins going to hit the market? And how is it going to affect us as people that are in the market today? And this is what I'm saying, guys. We need to be taking profits, maybe stabling out some coins, while still building up over a long amount of time in dollar cost averaging. Take your 7 or 10% gains, stable them out, sit on them, and still try to build out a portfolio as we move into what could be a bearish market. Do I think that that bear market will stay the whole year? Probably not, but it could if the traditional assets collapse. And I've been saying, I think that a recession is right around the corner. We really need to be on our P's and Q's as we move through this space, because now we have some things that are out of our control, right? Traditional assets, the Federal Reserve, out of our control. Impending regulation, out of our control. They've already talked about KYC on stable coins, trying to get more regulation into stable coins, trying to get more information on people that hold crypto, trying to change these tax laws regarding crypto. We really need to be cognizant about some of the things that are encroaching in our rights as blockchain enthusiasts and investors. And so I'm going to try to be putting out more videos to kind of give a general sentiment of the market, but it's pretty difficult to navigate. And that's why I've been making less videos, because I don't want to get bad information out there on my channel. So I'm doing the best that I can with the information that I have, and trying to make a good deduction based on the information that's available. But yeah, I'm going to be putting out more videos about how I'm navigating this space. Make sure that you guys follow up with me in the comments, like, comment, and subscribe if you like this type of content. And I will see you guys next time. Thanks for listening.